for our first quarter financial result announcement. Thank you so much for being here. It is surely a delight to meet all of you personally. The Indian economy is growing at a steady rate, and the GDP growth of 7.2% in financial year 23 is a very positive sign, highlighting the resilience of the domestic economy. We are optimistic that the coming quarters will see further growth. With the government's initiative for low-income population and various other schemes for subsidized loans, the government's effort will help promote financial inclusion and make financial services more accessible to the poor and undeserved. IDBI Bank is committed to assaying a key role to support the government in this regard. IDBI Bank continues to move on its growth trajectory with yet another strong quarterly performance. With the commitment of being the most preferred and trusted bank, we continue to deliver the value to all our stakeholders. The bank's diversified portfolio with a strong monitoring of overall process of lending and recovery has considerably improved our asset book. At the same time, our strategies on enhancing operational efficiency and enhance the operating profit have also yielded the profitability of the bank. While we soon have a detailed presentation, let me brief you on some of the key highlights of our Q1 financial year 24 performance. First of all, I like to mention that whatever guidance note we had given to you for the current year, we have been able to achieve on all the financial parameters. In fact, rather we have surpassed that. The net profit has increased from 756 crore during June 22 last year to 1,224 crore, showing a YOY growth of 62%. Deposits have increased by 8.75% YOY, and advances have grown by almost 20%. The CASA deposits also grew little at a lower percentage, 2.80%, but still we have a CASA deposit of percentage of 52.61%. The NIM has also improved substantially. We have been able to achieve on all the priority sector parameters. Now coming to the asset quality, the GNPA has declined to 5.05, and the net NPA, which was 0.92 as on 31st March 23, has come down to 0.44. Now we are in the category of less than 0.50 NPA bank, net NPA. The provision coverage ratio, as always, continues to be the highest among the banking industry. It is 98.99, say 99% only. So only 1% is unprovided now. ROA also has improved to 1.49. It is quite good. And mainly we have been able to control on the slippages part also. The slippages during this quarter have been one of the lowest. And this slippage ratio, which we had guided that it will be less than 1.75%, is 1.16% only. The credit cost, although it is showed as 1.63, but actually we have made accelerated provision of 770 crore in the NPAs. If we don't take into that account, our credit cost is negative. So, and the capital adequacy ratio, last but not the least, continues to be above 20%. It's quite good. So with that, I will say that we continue to strengthen our performance with every passing quarter and are committed to do even better in the years and in the quarters to come. I again express my gratitude to all of you for your presence here. I now request the CFO, Madam Smita Kuber, to make a brief presentation on the financial parameters, post which we'll have the question and answer session. Thank you very much. Thank you.
Good afternoon to all of you, and I will be presenting the first quarter financial results for FY24. The major highlights of first quarter financial 24 is profit after tax we have recorded as 1,224 crore. ROA at 1.49%, operating profit at 3,019 crore. NII has increased to 3,998 crore, healthy NIM of 5.80%. Total capital adequacy ratio stood at 20.33%. Out of that, Tier 1 is at 17.93%. Net advances of the bank has grown by 20%. And net NPA has reduced to 0.44% and GNPA at 5.05%. Provision coverage ratio is stood at 98.99%. So on YOY basis, key metrics. The way a profit after tax has grown up on YOY basis by 62% and Q-on-Q basis by 8%. Even profit before tax has gone by 67% on YOY basis. Operating profit is up by 47%. NII of the bank has grew by 61% and 22% on Q-on-Q basis. NIM has improved by 178 BPS and 79 BPS on quarter. Cost to income ratio has reduced by 569 BPS and stood at 37.75%. CASA ratio is healthy at 52.61% and absolute CASA has grown by 3% on YOY basis. Retail to corporate advances ratio is 69:31 and it has improved from 63:37 from June 22. Net advances has grown by 20% on YOY basis. This I think we have covered net NPA and capital adequacy ratio. It is only showing the improvement percentage. So net NPA we have reduced by 82 BPS on YOY basis and GNPA we have reduced by 1485 BPS on YOY basis. Tier 1 capital has improved by 80 BPS on YOY basis and total capital adequacy ratio has also increased by 76 BPS. This is a snapshot of entire profit and loss account. We would like to share that this is also one of the highest quarterly profit what bank has achieved at 1,224 crore. You see the interest income of the bank has also gone up by 48%. Net interest income has gone up by 61%. And the operating profit of the bank stood at 3019, which is showing a 47% growth. Other income of the bank stood at 852 crore, and only in one area where profit on sale of investment. Last year we had some one-off sale, so in June 22 there was some exceptional item. Actually in this year we are not having that, so there was slight decline in that item. Provisions contingencies of the bank stood at 1,795 crore. As MD sir has said, we have done some additional NPA provision over and above the regulatory requirements, and we have disclosed it in the notes to account to the extent of 770 crore. Provision on standard asset also, we have done some incremental provision in RF1, RF2, and that is why the provision of standard assets have gone up. We have earned a profit in income tax book, there is a DTA reversal of 604 crore. Coming to the business performance of the bank, it is showing a deposit growth of 9% on YOY basis. CASA of the bank stood at 52.41%. And if you see in deposit book, the bulk deposit percentage is at only 12.16%. Regarding advances growth, we have said the retail to corporate percentage is 69:31, and which is improved compared to last June. And the structured retail asset portfolio of the bank has shown 13% growth, in which housing loan has grown by 15% on YOY basis. Standard gross advances of the bank again is improved and stood at 1,64,672 crore, showing 20% growth on YOY basis, and similarly in the net advances, it is improved by 20%. COVID-19 provision, if we see this time from March to June, it has increased by some, March to June it has increased by 400 crore as we have done some additional provisioning, and that is why it has increased a little. Asset quality, this is also one of the biggest thing. The pre-CR is the best in the banking industry, and TCR of the bank is at 98.99%. The asset quality of the bank also, if you say the GNPA ratio are only now 8,763 crore and net NPAs are only 731 crore. The ratios have improved considerably, and in 731 crore what we see is substandard assets we have 593 crore and doubtful asset only 138 crore. So overall book in this also we are already provided almost 92%. So provision wise bank is adequately provided. This is showing the FT-NPA movement, and when we started the beginning of the quarter, the gross NPAs were 10,969 crore, which is reduced to 8,763 crore. It is the impact of recovery, upgrades, write-off, everything. The increment was negative to the extent of 2,206 crore. FT-NPA on net basis is only 468 crore for the quarter, and slippage ratio of the bank stood at 1.16. Credit cost, as already MD sir has said, because we have done incremental provisioning, it is showing 1.63. Otherwise, credit cost for the quarter will be negative. Capital adequacy ratio, this is definitely without considering the profit, but Tier 1 capital also, if you see amount wise, it has increased because of DTA effect, and Tier 2 capital has also increased for the bank. The RWA has slightly increased compared to March because of market risk, as we are having a high investment book portfolio. So capital adequacy is at healthy at 20.33 and leverage ratio is at 7.81. Shareholding pattern of the bank has not changed and it is almost the same like June 22. Market capitalization has improved considerably at 59,515 crore. And these are the focus areas or the guidance notes. Going ahead also, we will have the business growth in the range of 12 to 14%. Credit cost and net slippages ratio, we will try to maintain in the range of 0.4% and 1.75%. We will continue to have ROA above 1.2% and ROE above 14%. CRAR will be maintained above 18%. NIM we will be maintaining in the range of 3.50% and CASA in the range of 50%. So, and GNPA also gradually will be brought down from recovery target of 3,000 crore, and net NPA level we will try to maintain below 1%. So this is what is the snapshot of Q1 financial results. Thank you.
We will commence with the question and answer session now.
Sir, this is Joel Rebello from the Economic Times. Your margins are probably your highest I've seen, I think 5.8 if I'm not wrong. Is it because you all have been able to pass on the higher cost of funds to your borrowers? Why is the margin so high, and what is the outlook? Is it at a peak basically now?
We have given a target of about 3.5%. I may mention one, of course, you know that with the rate increase, the yield on advances has increased by almost 156 basis points, and cost that sometimes lag effect will be there, but slowly in the coming quarters that deposit cost of deposits may further show some increase. But this quarter we had one good recovery of 1,000 crore. So which normally we credit to interest account. So partly it has contributed to the increase in margin. That is why it is 5.80. But the core net interest margin, that internally we monitor core net interest margin, that is 3.94. If we exclude that also, and which has basically increased, like earlier by in June 22 the core interest margin was 3.73. It has increased to 3.94. So that is why we are saying that because some time lag effect may come, so we will be able to maintain our net interest margin above 3.5%.
So it will come down for the rest of the year.
No, in fact, not. Although, conservatively, we have always been telling 3 point whatever we have told you in the past also, we have much exceeded those results. Like advances, we have been telling that we will be growing around 12 to 14% or 10 to 12%. But this year the growth is quarter 19% YOY there. So what our intention has been, whatever we tell, we have to exceed those targets. So that is what we have been doing. So that is why it is there. But the core net interest margin was 3.94, which is quite strong.
Sir, and also your other income is fallen. I think there was one-off there last year.
Yeah, other income basically, as Madam told.
Yeah.
One time, there was two one-time items were there, 215 crore. Second, what was happened last quarter, because the interest rates were rising. So that time normally every bank will transfer some HTM to AFS every year. So that we had basically sold during first quarter itself. This year that we have postponed it because there are issues that maybe by last quarter interest rates may decline. So that time it will be beneficial. So that is why if you see the treasury income is lower. So but that is our strategic decision. So but that is a potential gain which is available to us. So because of that only there, but otherwise the overall business income has increased.
So 215 one-off and treasury income is lower. That's the
treasury
reason.
income
That's the reason.
Slow down because that will come in the not this quarter, maybe will come in the last quarter.
Thank you.
Something related to the guidance. So last time also we are told 3.5%. We are delivered 5.80. This time also we are conservatively guiding guidance is only 3.50. So we will continue to excel over the commitment.
Your treasury investments have shown a sharp rise during the quarter. So what can you just give the details of that? What has which component has
No, it is normally like advances have also increased, and treasury basically under SLR it has shown some increase. So, but it is normal in the normal interest course of business, nothing quite unusual. So both way, we have to use our funds in a profitable way. So accordingly, this is a strategic decision. Sometimes for LCR also, but.
your treasury assets are
But SLR we are maintaining 27%. So that is well above the required.
Yeah, so it's mostly SLR.
Yeah.
Because it's even higher than your retail book now, which is not normally the case. So that's why.
18.5% is generally required. We are maintaining 25%, 27%. Last year also we were maintaining 27%, and of course March it was 30%.
So my question is again on your NIMs. What is the reason for such an elevated difference between core NIMs and the reported NIMs? And the other part is that the technical write-offs have gone up this quarter. A lot of it is also coming from retail, which is a relatively fresh book built at the bank, given that retail efforts started after 2019. And the write-offs even in the corporate loan is a little high. So I just want to understand these two things.
Two things I like to mention. One, this NIM I have already explained. There was one good account. This time, in fact, recovery are very good. 1,628 we have been able to recover. So normally, like as per the policy, first we have to credit it to the interest account, then principal, because there will be more revenues also. So that principal remains, so that we will continue to have our claim to have further more recovery. So this is as per accounting policy. All the banks follow that. So this is that goes to interest income. In case of OTS, there are, as per the accounting principle only it will go. That is why it is there, it is high. But for calculating our core NIM, we exclude whatever one time is there. That is what I had told earlier, that our core NIM is 3.94. Even if we exclude that, that is 3.94, and which has gone up from 3.73. Now, as far as you are saying technical write-off, it has not gone up. In fact, the technical write-off, it is a write-off only. It is during this quarter, it is 2,142. So one recovery about 2,000 crore, that was the principal gross outstanding. When we have already recovered, so that as per again accounting policy, we have done the technical write-off. But I will like to mention further here that even if there is a technical write-off, it is only for two purposes. One, cleaning the balance sheet. Second, for tax purposes. And even if technical write-off is there, our NPA monitoring group, we have two groups. One NPA monitoring group for the large corporate accounts, one credit monitoring group for the retail accounts. So we do not differentiate between the live account or the technical write-off. Same efforts are put for recovery of both the accounts. That is why if you see the recovery from both live and technical write-off accounts will almost be equal. So efforts, there is no change. So whether it is in technical or live, efforts continue. It is mainly where 100% provision has been made. So for accounting purpose, the banks do technical write-off. So this is the difference.
Because I saw in one of the slides, corporate technical was around 59,000 crores or so.
That is all over a period of time.
Okay, cumulative.
That is over, not just this year. It is like starting from 2015-16 historically, whatever is coming. So from that, we continue to recover. Not that this year, if you see this slide, I don't know which slide you are having, return of it 2,142 crore only. That is cumulative number over a period of last 8 to 10 years, whatever has been.
One more thing which is very interesting on your NIMs is, sir, it has gone up despite about 40 bips increase in your cost of deposits as well as your cost of funds. So what is helping you, sort of grow your NIMs, whereas people like Kotak, HDFC, Yes Bank, they've all seen a bit of a hit on NIMs. So how is it that you're playing your product mix, or how is it that you're operating your product mix?
Two reasons. One, of course, the quality of advances we are controlling. But secondly, during the last 1 year, if you see, after June 22, RBI has raised repo rate by almost 160 basis point. So that has, as I was explaining earlier, so the yield on advances has increased by almost 150 basis point because our more than 50% of advances are linked to the external benchmark rate. So immediate impact is there. And then some are linked to MCLR, corporate advances and all these things. There also with that impact, MCLR. So yield on advances has increased. But the cost of deposit has increased only by, this total from June 22 to till date we have see it is 37 basis point. So some difference is there because in deposit lag effect impact will be there. So excluding that, the core yield if you see, so again, after excluding that one-off income also, if we see that core yield also. So all this, how you manage your funds, I cannot explain about other banks, but we have been able to show perceptible improvement in all the parameters. That is what I can say.
So this is considered that one-off income also. It is June 22, our yield on advance was 8.51. It has gone to 12.47. So for conservative purpose and to have more clarity and transparency, we are talking excluding that one-off item. Otherwise, it is nearly 3.